Hey everybody, Boris, SBK Forex. Welcome to the crosses section for December 3rd to December 7th, 2018. And the crosses this week are really shaping up some very interesting trades, especially with the calm dollars against majors, calm dollars being very much the dominant pair right now as we enter the week. The three trade ideas I have to take a look at are Kiwi CAD, which looks very, very strong as a breakout to the upside, resistance 92 to support 90. Euro Aussie, which also looks now very much to the downside with 53 as support. It's broken all of the support now, has a lot of room to go to the downside. And a contrarian trade. If you want to get bullish CAD, the best chart on the books right now is actually CAD Swiss. We'll take a look at all of them. Let's actually start with CAD Swiss right now as our first look, and I'll show you what I have in mind. So the interesting thing about CAD Swiss here is, yes, we're below the 500 SMA. We are clearly sort of in a down territory, but it's a double bottom base here. The 74.50 held. And if for some reason we have, let's say, not as dovish, a Bank of Canada rate decision, if Powell is somehow maybe even sanguine about the Canadian economy, and that takes dollar CAD back down towards 131, this will shoot like an arrow straight up. Also, helping a little bit here is if any positive risk flows coming out of the G20 into Monday, if Xi and Trump just agree to not disagree, which is all that we can hope for, that also should provide a little bit of a boost for the pair. So kind of a contrarian look. It surprised me, but the technicals are actually signaling that maybe CAD is a buy rather than a sell here. So I like this trade. Very, very well-defined risk with the potential here for 74.50 as a trade. So let's take a look at Kiwi CAD now, which obviously looks very strong. It's making a massive, massive comeback against the downtrend that it's been in for really all year long. This is the relative strength of Canada that was there really until last month. And now we had an almost uninterrupted turn the other way. This has been a true V-shaped bottom. But one of the interesting things about these calm dollar crosses is they tend to just trend for a very long time. I mean, this is a very, very deep trend. This thing went from 90 all the way down to 82. It was an 8 or 7, 83, 7 penny move. And now we're back up from 83 back up to 90. So we did break the resistance right over here. I mean, this resistance was around, well, no, I take it back. This resistance is around 91. We're like right at resistance here, but very much coiled to the upside. A break through the 91.50 really opens the way here for 92. I like this thing on a momentum basis. It's overbought on RSI. It's curling up above the 500. I mean, there's a lot of reasons to want to be negative this trade. It's really extended off the moving average. But these kind of parabolic moves, that's very much a signature of them. Certainly, I traded tight. I would trade it with a probably, what's the lows over here? 90.75. I mean, maybe a 50, 60 point stop. If it runs, continues to run, let it run. If it doesn't, it's a quick stop, so you're not gonna risk too much. So just still looks very, very positive as far as the technical structure goes. And here's Euro Aussie. Oops, sorry. Which has been a one-way ticket to the downside here for another pretty much 3 weeks. It really accelerated last week, and you see that we closed on the lows, which is a very, very bullish or bearish sign. It's simply bullish Aussie in the sense that the momentum suggested there's room to the downside. And as you can see in the chart over here, the support is right here. We're at essentially 55 support. To me, this is a trade that is a momentum trade. You could go short right here, or you could just get a little more careful and sell the break at 54.50. A 54.50 break really opens up the run all the way down to 52.50 on the charts over here, and that creates just a straight down momentum trade that could close all the way down to the 500 SMA. I would put the stop right above the candle high here. If we take out this candle high, clearly the downside momentum has stopped. This basically is a trade on further euro downside momentum as we open up next week. If there's trouble with Italy, if there is sort of discord with U.S. on the auto stuff. All of that could really drive us further down. Also, by the way, the other component here is we could have very positive news with China and U.S. That's going to be bullish Aussie. I think that could drive it down as well. Either case, I really like this trade. It's a limited risk trade. Definitely oversold, but there's maybe more juice to go. And that's how the crosses shape up for the week. Wish you guys the best luck, the best trading. Boris, over and out.